We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about the Cardwell RSI Edge approach to using the RSI. Now this is his website, Cardwell RSI Edge, techniquepartners.com, and he's got a bit of information there, and the course is about $4,500 US, the best one, well, all of it I suppose. You can do different versions, and it pretty much breaks the RSI down into phases. I found a website that talks about the RSI Cardwell method in a bit more detail, and the reason why we're interested in the RSI is because it's apparently being used by other Wyckoff traders to help show, analyze relative strength. And when everyone's using relative strength, we like to know about it, we like to analyze that relative strength. So you can go to this website, the eLearn Markets, and have a bit of a study here. But quickly, the Cardwell method of the RSI is to break up the RSI into patterns. It uses a standard RSI 14. I'm assuming it's daily or week or monthly. He's got a monthly chart here, and you have the bullish range between 40 and 60. Then you have a super bullish range, probably 40 to 80. I think he's got it there. Then you have a sideways range, which is minus 40 to 60 or something like that. And you have a bearish range, a super bearish range, and you analyze each ranges accordingly. So once again, the RSI, the relative strength, it converts a wider chart into an oscillator type, and it uses the regular 14 period, and it helps you to just see the relative strength. So if in the Wyckoff world we're interested in the power of the thrust into new ground, so for example this is thrust into new ground, thrust into new ground, and thrust into new ground, and you want to know when the thrust is weakening, which implies that there's more supply coming into the market than demand. For example, as you can see here, that this peak here is higher than that peak. That means the thrust is stronger, and as this peak becomes less than the prior one, the thrust is getting weaker. Therefore, the demand is subsiding, and supply is starting to come in. So thrust is important. Relative strength help to show off the thrust approach. And here's an example down here. There's some notes on how he defines the bullish range, bearish range, sideways range, and the super bullish range. But a few notes down there. You can read that yourself. So I think that's all pretty good. But as you notice with an RSI, a strong trend with the RSI, for example, when it goes from the low point to the high point, is the best time to trade. You don't have to wait to get to super bullish phase. It's good to see when it actually goes from a low point to a high point, i.e. the trend of the relative strength. So I thought I had a bit of a thought about it, and instead of sending out $4,500 US to get the benefit of all this, we put together our view of taking advantage of the relative strength. Here's the generic relative strength, the RSI 14 on HMY, a gold stock. Now why we're interested in gold stock is we've got a thrust here, another thrust there. You see how the thrust actually weakens, and we've got a change in direction. And with the RSI and readtheticker.com, you can actually have a daily chart, but you can load on weekly, half month, monthly, or even quarterly time frames. So it's a multi-time frame presentation. And here's the generic RSI with RS14 at half month. So it's a relative strength, but just at a slower form for the daily chart. So what we're really interested in, we're interested in the thrust, and we're also interested in going from a low point on the RSI to a high point for trading, because that means the relative strength is going from a sold off view to a overbought view. And what we do to that, we like to put a moving average on it. So here we have got a moving average, which is the middle band. I've got a 50 SMA on this. And then we have a band of a certain amount of RSI points. So here we've got 50 to 60, that's 10 RSI points. So you see there we've got 10. So you put a trend on there, an SMA, and then you add 10 points to it and deduct 10 points. And as you can see here, in this phase here, the relative strength going, the bearish relative strength became weaker, which shows that the thrust of the downtrend was becoming weaker. Hence, a bottom was becoming near. Even though it took a year to go, it still illustrates that. Here you had the thrust going down. We saw the relative strength not making new lows, higher lows, sorry. And as you can see here, the blue really hardly ever really accelerated up to 60 or 70. We just noticed that the relative strength was shifting. Whereas in the generic relative RSI, it doesn't show that at all. We just see higher lows, but actually we see here the average is moving up. So here we've got a 50 moving average on an RSI 14 at half month. So now we get a breakout move, and we're going from the low RSI to the high RSI, and that's the best part of the move on the price action. And as we see here, price comes down, and as you see, the RSI fails to break the lower band on the F50 SMA, which goes to show that that's a bit of strength in there. It hasn't penetrated down to 30, which basically means it's been well supported. And as you see in this area here, we see the thrust on the downward side, or the thrust on the relative strength on the downside, is becoming weaker. Even you just see it ever so slightly, and it's highlighted better here as we get more blue zone there. And as you can see, buying the dips here starts to become attractive. So the putting a trend on the RSI itself. Up here, the trend line is pretty much, so the trend is a straight line 50, right? And here we're using a 50 SMA, the split between the red and the blue shades. Here it's a straight 50, and here it's an SMA 50. So obviously you can use SMA 20, SMA 30, or whatever you like. So once again, relative strength measure is not price. For example, even though it's getting bullish here, price is still going along sideways. It means the relative strength of this area here compared to that area there is getting bullish. But in the price action, it hasn't made any dramatic move higher. So you've got to be careful with that. But that's why I like to use the relative RSI with the RTT momentum tool. That's much more of a measure on the price action. And you just put in the settings which best suits the swings of the RSI you've chosen. So here we see pretty much a bearish action because RTD momentum's not going anywhere, and we start to get more blue on the screen in this area here as the RSI relative strength shows some, well, obviously shows some bullish strength, and it's confirmed by the RTT momentum. And it gave you a clue that something big was going on here. And you would have studied other charts and with the fundamentals, you would have seen that there was something else going on in the gold world. Gold was starting to move, other gold stocks were starting to move, and as the momentum, relative strength all started to shift, you start to ride the best move, the best price action of that move. So whereas in the Andrew Caldwell approach, he would say, well, we're going to put that into a zone. This is going to be a bearish part. This is going to be sideways, and this is going to be bullish. But he probably wouldn't recognise bullish was about there. Oops, sorry. That's bullish there. This is probably sideways, and this is probably bearish. He puts it into phases and he treats it like that. So whereas I like to see a rolling automatic trend line approach with bands, to have a margin of error of relative strength. Relative strength change gives you a pre-warning to price action change. Relative strength is not price action. You throw an RTT momentum that mirrors the swings in the RSI. I like to use a higher period than the daily. You might use weekly or half month or even monthly, just to take some noise out of it and give you an idea what's going on. But this is actually a mechanical trading system on its own, and I think it's a better deal than your 4,500 one for Richard Cardwell. But each to his own. I'm not, once again, I must say I'm not associated with the Richard Cardwell product. I've never purchased it. I've only done a bit of Googling on it. I'm sure it's a good product, but I'm just comparing the logic and the foundings of his product versus what we can do at readtheticker.com. Thanks for watching.